morning, everyone. This is Anne Marie. Here's a look at market movement on January the 6th, 2014. We are taking a look at SPY on the daily. Many of you know this formation if you've been watching me. For those of you who do not, let's expand it out to the weekly chart so you can see the size of this formation that we are looking at. It is quite large, beginning in 2007. All right, this is a butterfly with a first target at the 127.2 extension. It is there. Now, if you are the long-term trader and you are trading these formations, this was absolutely a beautiful one to look at from 2011 to now. Very nice, clean action. Essentially, no gigantic pullbacks. Everything's held the 50 weekly. We're now pretty extended from the 50 weekly, but we have stayed extended from the 50 weekly for a long period of time. Right here, as we began to move away, it went from 2008 in May all the way to July in 2009. June 2009 before a test. So it can go significantly farther. Right now it is about the same distance away. 2012 to 2013 is where this might have been. So we've got maybe one more month seeing a decline if we use this type of formation that says, hey, listen, we've got about 13, 14 months at the most before coming back into that 50. We could see a little pullback into that region. You know, that seems pretty likely to me. This will be the wave we begin to retrace once that occurs. And of course, I'm talking about a longer pattern here, so we really do need to focus a little bit more closely. For those of us who trade very actively in the market, that might be a difficult thing for us to consider, but it is very important to keep your eyes open to the big picture, or you're going to miss what it is that's going on. So here's what we've got. We've got a very extended SMI. It's very, very high. It's been sitting there a very long time like that. And so this pullback here also suggesting a little bit of a breath. It did come into the 50 here. We are a little bit closer to the 50 than we were, say, up here. So we could have ourselves another sort of channel coming back into that region. But if we come into target, that's going to get us up at the 185.29 area. I've got the feeling it is about time for this chart to start moving back. And so, you know, ultimately we're going to be looking for some retest area here to the south, perhaps through this gap fill event here, and that ought to take us, let's see, this gap fill event 167.19 into 166. That actually coincides with that weekly picture back into the weekly 50. So this region right here, and I am going to use the tool. This is Motive Wave, folks, and highly recommend it. Great stuff. We are actually working on building some we are building some automated trading mechanics within Motive Wave, so that ought to be pretty interesting when that comes about. But here's the top, and then we're going to copy, paste, and then here is the bottom. Right? Not really quite sure when we're going to get there, but we're going to leave those two ovals sitting there as potential target regions, as they do match the weekly chart for the pullback event. So we will begin to watch this and see how it meanders down. If you're looking at options, you're probably going to be looking at 3-4 months out, unless, you know, we have some kind of cataclysmic fall, which seems unlikely at this stage because people do not seem to be very fearful in the market at this juncture. So here's what we're looking at. We've got the inside day. We've had low volume. So big question mark here. If I could put an icon, it would be a question mark about what we need to do. From that perspective, everything does look a little bit frothy, but it could just mean that we're taking a rest until it's time to get back up into the real target region, somewhere around 185.29. These are the weekly pivots, I do believe. Let's make sure of that. Yes, they are the weekly Woody's pivots. Really like these pivots. I find them to be extremely useful. And so we'll be watching them over this week. We've just slipped past that pivot point. It will shift today as we open up because Woody's do not really propagate until after the first tick of the morning. So we are going to look at that. It's going to give us either a move that sends us up into this 185.29 or down back into this region of 181.50-ish. That's going to give us a decision zone because it will be holding the 50 on the 4-hour and coming into frontline support. If buyers step in there, it's going to be a nice trade back into the midline of this region, somewhere around 183. I anticipate that being the choice for the week. If it loses the area, then we're going to go to the midline of this formation. That's going to put us at about 179.50 to 179.70, somewhere around there. So, you know what? We'll look at this on Friday and see how well the anticipation of what it is that we need to do worked out. Again, if you are taking these trades, wait for confirmation candles. If you're trading the 4-hour, slip back into that 1-hour space and make sure that there's nothing standing in the way of you getting to that space. Now notice on the hourly, all of a sudden we see 181. That might be an interesting pullback event, but you can see clearly that what we're caught in is a little bit of a channel. Intraday trading means that you can take it above 183.79 or so, up into 184.60. The breakdown here of 182.45 ought to pull it back into a pretty sloppy space of that 181.60 area. So that's how SPY looks. I think Qs are the next thing that we should look at very, very quickly. The Qs, I have a different formation here, so let's just use our default template right here as it loads. Let's go back to the weekly chart here. I do not have as many drawings on this chart as it has done quite a bit of accelerating, is well out of the range. Notice how it's broken the trend line here. Let's take a look at this. Right, so we have a trend line that is, the farther back we go, the better off we are in terms of validity. So we've got a trend line that is essentially this one. And so we've got this big press to the upside here that's pretty steep in my mind. We were expanding a little bit. Hey, listen, notice I am not catching these wicks. What does that mean? You've got to let price action confirm. If you take a break out of a trend line and all of a sudden it begins to move sideways and it loses your breakout region, guess what it's probably not going to do? Yeah, continue its breakout. If it comes down here, loses the level of relative support, you know that you've got some problems. If it comes back, retests the line and fades, giving you a lower high, you know you've got likely downside action. All right? Though this is the trend line holding the channel, you can see that the 50 weekly moving average is definitely in the way of that formation. Okay, so you can see that super clearly there. Here we have a press up. It's holding the 8 very, very nicely. It had this topping event. It came in, could not hold it, filled the gap. This one looks like it's got more downside action associated with it into frontline support. So we'll see what's going to go on there in the week. A lot of things pointing to me. A lot of things are pointing to pullback formations. And I just, yeah, that's all I'm going to say about that. A lot of things looking like pullback formations. So long action, going to be extremely cautious about that. A lot of folks calling for long triggers coming up, but I do believe there are going to be bounces that fail from a formational perspective. So if you do take the long, expect it only to last maybe a day or two as it hits back up into frontline resistance. But the cues coming into support here, as I mentioned, should bounce, but into a lower high that will eventually fade, and that looks like what it is that we're going to have sitting there as well. Lastly, we're going to take a look at the IWM. This one has moved right on target. Right? We've had this 4-hour chart showing this formation. It came right into the level and has since pulled back. Now we're looking at a pullback of this wave, and it could be anywhere from 38.2 to 61.8. Here's where the 50 is, and here's where support level 2 on the weekly was for last week. Again, also losing the pivot like the SPY. And let's put the template in there. Right, that default template. Let's go into the hourly. I do not have Heikin Ashi bars here, so let's use those so you can see. These are such lovely candlesticks. I don't like them because they, I don't like to trade them because they do not give me exact levels. I'm looking for the real numbers. And these are approximations, but if you have difficulty understanding what the market is doing, you can see clearly if you are looking in a trending space, which is where you should always be looking, folks. Unless you are some kind of whiz-bang awesome, you should just be trading simple things. Right? And even if you are whiz-bang awesome, you probably ought to be making more money trading simple things rather than complex things. And as these charts go, if you're sitting in a trend and it changes color, yeah, you need to move in the direction of the trend. And if it changes color, you need to get out, right? And you look for a confirming candle in that space, always paying attention to a moving average. Heikin Ashi bars are really, really great if you just want to look at things visually and you don't want to be, concerned with too many other technical things. Heikin Ashi bars work very, very well. All right, that's enough rambling for me. Suffice to say that this chart is in a pullback formation. Here's a high, here's a low, here's a lower high, here's a lower low. Here's a lower high. It's bounded by the 50 on the hourly, bounded by last week's pivot. The loss of the level going to telegraph a lower low. Notice here we have a lot of negative action. So if we can, let's move this a little bit wider so we can see what's going on. We can see that this area right here looks right here, it's up here, so we know we've got a divergent motion. This looks like positive divergence, but it is coming into resistance because it's sitting under those moving averages, and we've got a longer term SMI momentum saying that that is a resistance point instead of a breakout level. That's not always true, but by and large, that is what it is that's going to say, so we're going to watch for the confirmation of that. In the end, You want to be careful, you want to pay attention, and you do not want to use what you think is going to happen as the reason for the trade. You must do what you see. And a lot of times we color what we see by what it is that we think that we are supposed to see. And I know that's kind of a psychological rigmarole, but it is true. So pay attention. Stop using biases that go, okay, this looks like a place for a bounce. This is definitely a place for a bounce. And say, really, what is this? Is this a place for a bounce? Yes. If the answer is yes, what should I see? If you don't see what you should see based on your own thought action, you're probably wrong. So you got to step back and say, wait a second, what is it that I need to be looking at? All right? Good luck trading, everybody. It's going to be a very, very interesting week.